Hey everybody, Jim Malone here from Dallas Trading Floor. Well, guess what? Qualcomm just broke out today. Now, we're in a downward trend in the market, but it does look like we're starting to move a little bit to the upside. And one of the stocks that I've been closely looking at is Qualcomm, and it did just break out today. And here's what I did. I did a bull put spread on it, and maybe you'd be interested in taking a look at it. When this slide was taken, Qualcomm was selling at $179.76. It was up $15.65 or 9.54%. Very interesting. Also, if you'll notice, very heavy volume, 184, so much larger than normal. This is based on some very, very good earnings that Qualcomm put in. By the way, this stock has a 95 composite rating. This is excellent. This is in the top, obviously, 5% of the market. And it is a very, very widely traded stock. Today, of course, Qualcomm beat expectations, and it's for its fiscal second quarter, and it looks like it's guiding higher for the third quarter. So it really jumped, and one of the ways you can take advantage of this, even if you want to limit your risk but still get part of the move, is to do a bull put spread. And here's how the bull put spread works. Now, when I opened the spread, I got a credit of $486. The risk on this one, the maximum risk is $1,000 on this one, and this is done by doing 3 contracts. Here's how I got into the trade. I first bought 3 170 May 24th puts, and then I sold the 175 put. By having the strike price on the sell higher than on the buy, this creates a bullish pattern. So this is a bull put spread. When I did this, I received a credit of $486. Now, the object here is to close the trade and keep as much of the $486 as possible. This was done with 3 contracts. As you can see by this chart, as long as we stay above about 177.50 at the beginning and at the end 173.50, we should be in the green area here. Now, what this green area means is that anytime I want to close the trade, I'm going to have to give back a little bit of the $486, but I will still come out on top. So as long as the trend of the stock is above where we are now, we should be fine. Also, but if the stock falls too much, I'm going to close it early at about 173. So if the stock falls down to about 173, I'm going to be closing it early. But as long as it maintains above about 173, then we should be in the green. Now, by the way, when this expires, of course, because both of the option contracts will expire, I will keep all the credit as long as I can get it to where it expires. So if it looks like it's moving against me, well, I'm going to close it early because I'm already in the green, but I'm going to keep it open as long as possible. Now, typically, if I'm still in the green after about 3 or 4 days, I'm going to close it early and take the profits and then possibly do it again. But this is a good way that you can participate in a stock that's breaking out with some safety. The problem, of course, you can use stop losses, of course, on buying a stock, but this gives you a little bit better way of capturing some of the profit on the move of the stock. And I do think that Qualcomm is going to be moving higher. If we look at the risk profile for this trade, you'll notice as long as we're staying above this 180, this is where it was today, we are definitely going to hold it open until the expiry. Now, if we hold it open the entire way, we will just continue to just pocket the 486 that we got when we did this trade. If we close it early, these give you an idea. So on the 19th, for instance, if we close it on the 19th and we're still above 180, we're not going to keep as much of it, but we're going to keep probably about $175 in the trade. So this is a way that we can participate. Now, if it starts falling in price, if the price of the underlying stock falls, let's say, from 180 down to 174, we'll probably close it early because that way we're going to hold our losses. We're holding our losses. Our break even is about 1 173. You can see that right there. So as long as we're staying really above about 174 or so, about 174.5, we're going to be in the green. We're going to hold the trade open. So this is an interesting trade. This is a way that you can participate in the breakout of Qualcomm. It does look like it is moving higher. If you like this kind of content, why not join Dallas Trading Floor? It's free. All you have to do is take a picture of this QR code to my right, and you'll be led right to the sign-up page for Dallas Trading Floor. Also, you can reach the sign-up page at https://beacons.ai/Dallas Trading Floor. Till the next trade, this is Jim Malone signing off. Thanks for taking a look. Happy trading.